Hi, this is Jeffrey Kurt Financial Group. Today's Friday, September 12, 2025. Yesterday we got the CPI number, 2.9% year over year, in line with expectations. The other dynamics of it were in line as well. So the market is, for the time being, for this moment, maybe not as concerned about inflation. Now, who knows what the future brings? But, within that context yesterday, the 10-year Treasury bond fell below 4% temporarily. It's up a little bit today, but, yesterday, again, came all the way down to slightly below 4%. I think it's kind of important that the market, the interest rates keep going lower. And from that perspective, the markets are pricing in 3 rate cuts between now and year end. Now, of course, we're going to get one next week. So, that will be the start, but they're pricing in 2 more. And that, I think, could set up for a disappointment. Maybe, the economy slows and the other 2 rate cuts are needed, or the negative might be inflation picks up a little bit in the next couple of months. And that that would put those rate cuts in the future perhaps on hold, and I'm not sure that's what the market's priced in right now. So the stock market took off, celebrated the low and in line CPI number, and then also with the interest rate cut coming next week. Also next week is options expiration on the next Friday, and that could bring some fireworks or at least some volatility back to the market. I'll just close with the S&P was now up around 36% since the April lows, and that's the third highest advance in a 5-month period in the last 20 years. So we've come a long way. The market does just seem to keep grinding higher, and once again, there's a lot of complacency there. But right now, doesn't seem to be a reason to sell or a catalyst. Plenty of opportunities for catalysts to arise in the next couple of weeks, but we'll tackle that as it comes. Thank you for listening. Have a great weekend. Please like and subscribe, and we'll be back on Monday. Thank you again. Goodbye.